Manpreet, in your notes, you spoke about how a truce between the Saudis and the Russians could take oil back to $40 to a barrel. Are you batting for a truce?
I wouldn't really, say it's a base case. It's a bit hard to sort of see how that's going to evolve, in the short term. But I think what's key here really is that oil is a bit of a double-edged sword. I think low oil prices at a global level are actually a positive because, especially for oil importers, it's almost like a tax cut. But if you take the U.S. economy specifically, or I suppose the three largest oil-producing economies, in terms of domestic impact, it is a double-edged sword. So, look, moderately higher oil prices might help. To me, that's at the moment is still a very sector-specific story. I think as long as the key is we don't get a significant spike in oil prices, as long as we avoid that, then I think the focus is really on the broader economic effects of the virus rather than worrying about oil alone.
Right. I think the greater worry there is a further breakdown in prices going into teens from here. And let's see how the story unfolds from there. But I want to talk about the U.S.'s role in the oil market. We're given to understand that a special envoy from the U.S. is being sent to Saudi Arabia to perhaps discuss oil, among other things. Do you think that the three countries can come together to figure out a solution sooner rather than later to actually contain this oil route?
Well, it's an interesting prospect. I mean, I think it's a significant move. Clearly, in terms of the domestic commentary in the U.S., we saw mixed responses, some positive, some negative. So I think it's far from a done deal. At the end of the day, I think it can be significant because there are two specific angles here. One is if you look at energy sector, whether you look at equities or corporate bonds, I mean, they are pricing in quite a sort of worsening of the outlook comparable to when oil prices were last this low or the 2008 crisis. So any sort of less bad news could be a positive. Second is that, look, it's quite important with the future of oil prices because, with OPEC's sort of share of global output reducing over the past couple of decades, prices, economic theory will tell you that prices ultimately come back to the variable cost of production, which is determined by U.S. producers. So, it remains to be seen. I think we're quite far away from any sort of agreement. It's early days, and clearly we've got mixed messages from the range of U.S. producers, regulators, and industry. But it's something that's absolutely very important to watch. To me, though, much longer-term story than the next few weeks or couple of months.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.